Startup India. My name is Shri Raj Deshmukh, and I will be your host for this session. We would like to thank our session partner, Refinitiv, Gold Partner Netta, Gold Partner Netherlands Embassy, Gold Partner Cybersprint, Bronze Partner Onfido, and Knowledge Partner EY. We are now moving on to the last session of the day on future of RegTech with AI and ML. I would like to introduce you to the moderator of this session, Mr. Nidhish Bhatnagar, Director, School of Information Technology, Artificial Intelligence and Cybersecurity, Rashtriya Raksha University. Next, I would like to welcome the panelists, Mr. Charles Delingpole, Founder, ComplyAdvantage, Mr. Robert Kotov, Business Development and Partner at iDenfy, Mr. Koen Vanderhoydonk, CEO, BeLuxDe Blanco, public speaker, RegTech influencer, and an author. And last but not the least, Mr. Govind Balachandran, CEO and co-founder at SignalX. And without further ado, I would request Mr. Nidhish to take this up further and kickstart the session, please.
Thank you. And a very good evening or a good morning or a good afternoon across the globe, wherever you are. Firstly, I would like to thank IMAI for for constituting this panel and allowing us to exchange our thoughts with all of you. I'm really honored to share this digital space with the panelists who are esteemed in what they do and what they have done till now. But anyway, they will tell you all about that subsequently. This particular session is dedicated to discussing the future of RegTech and the role of artificial intelligence and machine learning in the same. So, financial sector has always been hugely data intensive, and the increase of operations, with the increase in regulatory and compliances, will really has not simplified the process in any way. Rather, BCG in 2019, if I remember correctly, made a mention that banks were tracking 3 times as many individuals regulatory changes, as 10 years back. And this was 2019. I'm so sure it would have really gone up even now, especially during COVID times when there is the number of people who are actually coming down to the bank are much less. And these revisions of regulatory would be averaging about 200 per day. Huge data, accuracy of compliance, increasing number of regulations. The cost of governance, risk and compliance is high. I would say almost 20% of the operating costs. The huge data can best be handled for smart and safe decisions using AI, at least that is what the hypothesis is, having smarter machine learning algorithms, and have better and more efficient RegTech and FinTech services. What I will do is I will discuss a few case studies in a very short period before I hand over to the panelists. And then maybe we can deliberate whether these case studies which are focused on recent bank frauds and even failure of banks, could they have been avoided? The first one, of course, is the 2007-2008, the famous US subprime financial crisis, where the compensation systems directly led to the crisis by encouraging short-term performance with unheard of incentives and compensation, when in reality the risks were mostly medium and long-term. Well, it is still very fresh because it really caused a global meltdown. And the FCIC report, if I remember correctly, makes a mention that in the years leading up to this crisis, too many financial institutions borrowed to the hilt, leaving them vulnerable to financial distress or ruin if the value of their investments declined even modestly. For example, as of 2007, the 5 major investment banks, Bear Stearns, Goldman Sachs, Lehman Brothers, Merrill Lynch, and Morgan Stanley, were operating with extraordinarily thin capitals. By one measure, the leverage ratios were about 40:1. That implies with every $40 in assets, there was only $1 in capital to cover losses. Borrowings were short-term, with about each bank had huge amount, billions in equity, and about 20 to 30 times in liability. Borrowing was almost about 6 times as for the equity. Well, It was the equivalent of small businesses with about $50,000 in equity and borrowing of about 1.6 million, which was due each and every day. This is one particular case study, more on it subsequently. Let's look at something which is nearer to home, or at least to India, which is the 2018 ILNFS case, wherein the key management personnel got heavy compensations in 2017-18. Now, ILNFS had a consolidated debt at that point of time totaling to Indian rupees 1,064 billion and a loss of almost 19 billion during 2017-18, which is something which cannot be forgotten. And there were key management personnel, well, who received hefty emoluments despite all that. The similarity of US 2007 and to the ILNFS case, which was almost a decade later, that is in September 2018, should not be missed. Especially in the ILNFS case, it would be an understatement if I said that the concerned central bank in India could not spot the excesses leverage of ILNFS. Its debt as on 31st March being over 1,064 billion, layered on an equity of just about, which I told previously, about 70 billion. Wonder why the central bank did not act on time. These are questions which we will leave out of this discussion. Having set the context, we can safely argue that as compared to the past financial crisis, let's talk about US subprime 2007-8, today's institutions are larger and riskier. So that is where, to a large extent, you have huge amount of data, and that is where the artificial intelligence and machine learning comes in. Broadly, AI and regulatory compliance may cover stress testing for financial forecast models, automation for tracking and monitoring regulatory changes, and even down to maybe email filtering to ensure that privacy is in place. Stress testing in financial forecast model is very essential. It helps enterprises in financial services to predict and model regulatory risk. And ML assists in finding hidden patterns in historical financial data, or for forecasting revenue data. It assists in AML, that is anti-money laundering, automatically monitor customer transaction data to identify anomalies and ensure they are compliant with the regulatory requirements. The next, of course, was automation for tracking and monitoring of regulatory changes. Huge regulatory costs, risks of non-compliance, predict compliance, so all these things are what motivate AI and ML or RegTech to come in for FIs, financial institutions, to start shifting towards AI and ML. The use of smart RegTech tools that will help them pick up early warning signals about impending crisis situations in the financial services sectors and information on key aspects that caused past financial crises in the first place. Things like whether the compensation policy is rewarding, the quick deal when the risks are medium or long term, or whether conflicts of interest are causing a financial institution to go rogue, or what the real leverage of a financial institution is after taking into account all aspects such as off-balance sheet items, etc. Now, all these were applicable in the 2018 ILNFS case. There was a PNB case in India in 2018 again, the 2007-8 US subprime, and the 2010 Indian microfinance crisis. So we have seen an ecosystem wherein these things happened, and now there are RegTech apps coming in, especially machine and deep learning. So typically what will happen, two crucial things will happen. The first, central banks as well as other regulators and supervisors will need to remove any ambiguity in rules and circulars to their constituents. Two, machine and deep learning on their part will have to develop the ability to discern causality as opposed to mere correlation and association, to have greater predictive ability for regulators and supervisors. It is a fusion basically of the deep domain knowledge of the financial sector and strong technical knowledge, which can lead to practical, usable regulatory and supervisory tools with enhanced predictive ability. Having said all this, I do not want to speak more. I just want to listen to our panelists as to what they have to say. So, well, the first panelist coming up next is Koen from Belgium. Koen, over to you.
Oh, thank you very much, Nidhish. And you made a great introduction actually to what I would like to add to this discussion today. Well, first, a little bit about myself. I am extremely passionate about RegTech. And I've been so passionate that a year and a half ago, I wrote the first RegTech book in the world, which was the RegTech Black Book. And as we speak, we are now writing the new one, which will be released in November. So new insights are coming soon. But I'd like to take you on 2 points on your introduction, and then I'll gladly leave it to the next panelists to also give their views. And the first one is, you mentioned a couple of key dates in our financial history, which are very close to us. And I think that we should never forget that these crises that you mentioned, especially talking about 2008, has also been a blessing in the sky, because it is also the trigger of everything that happened around fintech. It was a brilliant moment for entrepreneurs to step into the financial industry because we were at our weakest point. So they were coming in and were trying to disintermediate us and try to get some of the key features, i.e. our clients at the end, towards their systems. Now, what you see is that not many actually succeeded to gain the full trust of the client in terms of the fintech world. So after a while, all the banks in the meantime became agile and were actually adapting to what the fintechs were doing, you saw that these entrepreneurs suddenly had to change their mindset, and they were no longer trying to get business from the banks, but they were trying to collaborate with the bank. And that was at that point the one and only thing that was really still a big burden for the FIs, the financial institutions. And I think you pointed that out very clearly, that this is regulation. Let's be honest, after those crises, something beautiful happened, which is the regulator that stood up and was trying to tame the beast, saying no more, not again, we will prevent this situation of happening again. And how to prevent this was by putting laws and regulations into place. Many. That's something you also said, that there were a lot. So banks were struggling to cope with all the different regulations. And then it was a beautiful moment, I think, for entrepreneurs, such as we have people around us in this audience, to try to fix problems for the bank and their corresponding clients. And that for me was the born of RegTech. RegTech was the first time that we were really collaborating with each other, that globally we were collaborating with each other. And also for us entrepreneurs, it was the opportunity to break out of financial services, because the moment you think about regulated businesses, you don't think about banking only. Think about the food and beverage industry, think about entertainment industries. There's a lot of risk and risk frameworks that are applicable, and laws and regulations applicable on different industries. So there, I think, is a huge opportunity. So you see, I'm very passionate about RegTech, but at the same time, I also want to preach today that RegTech is over the hype cycle. It's over and out. And I like to come to my point with one example. I was speaking to a gentleman responsible for AML in a large European bank, largely a global bank, to be honest. The guy was passionate about technology. So he said to me, Koen, I'm trying all the different AIs that are on the market. And every kind of startup that comes to me, I'll try them out because I'm very curious. And one time, they had a result. They found the clustered information inside of their data set. He was extremely proud for the startup, but also proud that he found it together with them. So as a good citizen in a bank, 3 lines of defense, he went up to this first line of defense, being the CEO. And that's where the problem started, because he said, guys, I found a clustered information, where the CEO, natural response as a bank, said, but hey, that's pretty good news, but how can we deal with it? What can we do to mitigate this risk? Because I'm responsible. I'm the bonus patrias familias. I'm the one that goes in jail if something goes wrong. And that's where it became difficult, because it's a cluster of information. I cannot pinpoint this out. So what did they do? They went to the regulator, knocked on the door and said, dear regulator, we got good and bad news. Well, the good news is that we found high suspicion of fraud. The bad news is we cannot pinpoint it. And the answer of the regulator was very simple. they took out the book, well, not the RegTech book, unfortunately, but they took the book of all legislation and said, but you know the rules. You have to take responsibility, and we will one day, one time control you. And that's exactly the paradox that today we're talking about. Because earlier, Nidhish already mentioned, rightly so, that regulators not only put in regulations, but they also force the financial industry to share data with each other. And we later on will have a nice example how India is also bringing that all together. But the data is centralized somewhere. And my point is, imagine a world where that same startup, AI startup, fintech startup, could run exactly the same on a bigger data set. I don't think we need to be rocket science to know that it would be more clearly and probably have a better result on bundling the clustered information. And I think at the end of the day, it's all about what is the objective of us as an industry. And I think, speaking for myself, the objective is very clear, is to make sure that we continue to be a trusted environment for people to buy into their dreams. And that you can do if there is no fraud, if there's no anti-money laundering happening, and so on and so forth. So money laundering happening, not anti-money laundering. There should be a lot of that. But as we need to make sure that this is a safe play for everyone. And therefore, I'm saying that it's up for subtech, supervisory technology. It's up to the regulator to take shared responsibility. And that's something that you see culturally happening already with a lot of us nowadays. Think about blockchain, nice technology. But if you bring it down in a cultural thing, it's distributed trust. Everyone is responsible in the chain. And I think that's something where I'd like to stop it for now, for my part. So just that, you know, I'm passionate about RegTech. I also work for a company called Blanco, which is a wealth tech. We serve around 150 financial institutions. And we use a very beautiful product in order to do our AML and KYC checks for our clients, and that's done by ComplyAdvantage. So I think that's the excellent way of introducing Charlie.
Thank you, Koen. And well, Charlie has already got his introduction. And well, Charlie, over to you.
Great. So I'll give a brief kind of like 5-minute intro now to ComplyAdvantage and what we're doing. I'm the founder and CEO of ComplyAdvantage, and what we are is a kind of AI-based RegTech company, and what we're building is Comply data. So we have a database of every person and every company in the world, including people linked to money laundering, terrorist financing, every company, every shareholder, every director, and we can categorize people and companies and all linkages between them according to various different areas. So that could include if they're sanctioned, if they're politically exposed, if there's adverse media against them with human trafficking or drug smuggling. And then we have data on the companies, so when they're incorporated, the nature of their business. And what we've done is try to connect all that data with a kind of hyperscale approach. So we're ingesting millions of data points every day, translating information from different unstructured texts, and then providing the kind of APIs and tooling for that so that you can understand which person is actually the person you're trying to diligence versus the ones which are irrelevant. So we've raised now $110 million, roughly 300 people. We have clients, like 1,000 plus clients in 80 plus countries. And our last round was from Goldman Sachs, but we also raised some Index, Boulderton. We have clients in every regulated space. So banks, payment companies, crypto companies, but also we have lots of partner companies as well. So we partner with Koen, which embeds our data in their platform. So really our kind of vision is to be the global source for every platform and fintech and bank in the world when they want to make decisions around counterparties and transactions and other such data. That's the basic gist, and we're excited to be here today and partner with the companies around the world.
Thank you, Charlie. That's brilliant to hear your views on this, and we'll definitely talk about the data, and of course, I would definitely like to hear more about supervisory or subtech from Koen. Maybe I'm so sure there will be some questions in the chat coming later on. Over to you, Robert. Looking forward to hearing your views.
Hello, everyone. I'm Robert, partner of iDenfy. And what we do is very similar to what Koen does in Blanco and ComplyAdvantage. We are a QIC and AML compliance provider for different companies from around the world. Currently, we have like 250 partners from all parts of the world, actually. And I like that Koen touched the crisis point of our world, and we are in the crisis at the moment, I guess. But everybody knows that people learn from crisis, and we learned that throughout the years. And what I want to point out that fraudsters are learning from crises as well, and they are really sometimes a step or two ahead of regulations or any authorities and so on, because we do not need to go through the whole bureaucracy process. We just look for ways how to enter some industry, some market, and just to make money in a dark ways. So AI really helped to combat these fraudsters, at least at the start, and we are all operating from 2017. AI is one of our key ingredients, if I may say so, in our product. But actually, throughout the years, we learned that AI is not enough, and the best is AI and human symbiosis approach to identity verification and compliance. Because sometimes AI can really easily read a Western document done with a good camera, and everything is good there. But there are some challenges with particular countries or industries. For example, with India, with some special documents like Aadhaar cards or similar, where a human can really help to process and return accurate data for the partner, for our partner, for the customer. But humans can be easily tricked these days, and I just want to point out one case study which I saw on YouTube recently, where one guy for a couple of weeks he was attending meetings using virtual camera, not using his real life persona in the meetings, but using pre-recorded stuff. And it's the same in identity verification. For humans, sometimes it's really hard to actually see if it's just a virtual camera or a human sitting in their rooms doing the identity verification. So AI, it has its place, but it also can be tricked. And what we noticed that we need to go broader into a fraud prevention tools and actually inspect deeper the people who are onboarding into their company platforms. And just checking their emails, for example, when those emails were created, their phone numbers, are they using the hidden number, are they using VoIP virtual number, are they hiding their IPs, even tells us a lot about the person. And identity verification then completes the whole cycle. Because if you look at the dark web, there are people who are just selling their identities with their real document, with the real face, and we can onboard any company's platform, website, and actually the compliance part is complete, but it was with bad intentions. So looking at more patterns than just identity, than just AML compliance, but really to the maybe social profiling, and other details of a person's identity is really important looking into the future of fintech, of RegTech. I believe so.
Thank you, Robert. Thank you. Wonderful views. We'll discuss more on this with a few questions which are already popping up. But before that, we have Govind with us. Govind, over to you, please.
Thanks, Nidhish. Great to be here. So I'm heading SignalX. We are an India-based risk intelligence firm. So we work across risk intelligence and forensics domain. So what we have at SignalX is what we call a due diligence AI, which pulls data from thousands of sources, both domestic and sources across other various countries. And we run a set of 200 plus checks on any given target. So it could be a person, it could be a company, it could be a partnership. So you give the name to our AI, and then we bring the data from thousands of sources, and we run a whole range of checks. So the checks that we run, of course, so starting with something simple like the financial health of a target, to something like identifying the connected people, the ultimate beneficiaries, looking at the criminal background, litigations, insolvency, bankruptcy signals, to even something like various regulator touch points pertaining to criminal activities, defaults. All of these information, including sanctions, adverse media, and everything comes into our platform. So something that we do is, of course, we integrate with lots of these local sources, about 200 plus regulators alone, that pump data into our platform. So we make use of the existing infrastructure that the government and across, the governments of other countries that make available for us to use this data to make certain credibility decisions on the counterparty, right? So at SignalX, what we are building essentially is a global counterparty credibility verification platform, wherein you should be able to authenticate and understand the credibility of any party that you're doing business with. So I think from the India front, Nidhish, quite a lot of things have been happening. As you mentioned, ILFS is was a big milestone for a lot of for a lot of gaps in the financial system that had come up. But however, I think there is a preventive set of activities that we can look at, and then there is a reactive set of activities that we can look at, right? I mean, so if you look at an incident which has occurred, then we are talking about recovery, we are talking about damage control. Then there are regulations that come in, something like an insolvency or a bankruptcy code. Now that is looking at managing the whole the debt of ILFS, and how do we get the money back, right? Whereas something like on the preventive step, which we are talking about, adequate technology implemented at the early warning signal level, so that we are able to identify certain issues that may happen. So we as a platform, we fall on the preventive and preemptive side of things, where we tend to help our users understand the risk associated with the party that they are shaking hands with. So I think quite a lot of changes happening, in the Indian ecosystem, when it comes to the data that is made available and the adoption of technologies across different functions that pertain to, this type of risk. So I think, in the course of this, conversation, we'll deep dive into many of those. So good to be here, Nidhish.
Thank you. Thank you, Govind. Great to listen to all of you. Well, we have got a flurry of questions coming in. I will read out the first one. The first, I think, would be for Koen to answer, or maybe deliberate, and then we can all take it on. Which is, with new innovative financial startups coming in, would you advise the entrepreneurs to balance the integration between RegTech and Subtech at an early stage itself?
I think it's a very easy answer, to be honest. I think if you are a starting entrepreneur, there's a golden rule, I believe, in the industry, in the world, is that you need to be convinced that you're solving a problem. If you know what the problem is and you know how to solve it, then your question of RegTech or Subtech doesn't matter anymore because you're solving the problem, and the problem most likely will be common in the industry. I think the companies which are thriving nowadays are those companies that are really solving real time or real issues. And those issues, as I said before, in my opinion, they often shared. So back to the basic, I would say.
Great. I think that's brilliant. Anybody else would like to add on to that? But I think Koen has really answered it well. I mean, it doesn't matter. I agree with him, right? Okay. Next question is coming up, which is how can regulators and enforcement agencies have an upper hand to financial criminals who use technology advancement for their benefit? Yes, please, Charlie.
Yeah, so great question, and definitely points to a huge problem. So what we've seen in the past few years is every couple of weeks someone being fined like $1 billion for some sort of huge grievous mistake, and you've seen the big banks all over the world being linked to drug trafficking and money laundering, and I guess everyone has their own thesis as to what causes this and how to solve it. My answer was that the underlying data was flawed, right? So typically what you saw in terms of the way it was done was you'd have these big databases like WorldCheck, Dow Jones, LexisNexis, right? And you have like 1,000 people who build these databases. And for me, the answer was that it's impossible for 1,000 people to try and track every person and company in the world. And therefore you needed a new approach because the data's out of date. It's manually compiled. There's no real intelligence to it. So for me, the answer was to reconstitute a system of tracking counterparties and screening and identifying such that you could reduce drastically the false positives, as in the incorrect matches, but also really catch the needles in the haystacks, the really critical high risk, so you can direct your energy and investment into the important, challenging due diligence, kind of Jack Ryan shadow agent style investigations, rather than the monotonous, huge drudgery of wading through false positives. So the answer to fines, money laundering, all these things is RegTech and better data.
And
Amen.
I would, yeah, I would add to that regulators should, talk with companies and entrepreneurs just like us here more, because we are actually at the front line of these problems. And in some cases, we can really discover the gaps in the regulations. So just a small example, in UK or in USA, it's still enough to verify only the document, the picture, in some cases without the face, and it's enough for the regulations. So it's actually a gap in the regulation left by the regulators. So they should just, talk actively with us to listen to us, and we can improve.
Right.
So I think Nidhish, just adding to that, I think it is also required to bring all data in one place, right? I mean, to make the best use of it. So I mean, relying on legacy databases that are centralized and that require to be constantly updated by analysts. I think there is only to some extent that the database can keep up, right? So I mean, AI is the way to go. I mean, even for that matter, the amount of data that is now available today is, it is exploding. So there is a limit to which analysts can sit down and process that information. So we may not, so even to implement the existing regulations, like even if the criminals are not, even if they were not getting smarter, still the data is just increasing exponentially. So even implementing the existing regulations would require upgradation, irrespective of whether the frauds are becoming more sophisticated or not. So I think AI implementations are going to be terrific value add in connecting the dots across databases, bringing in different types of data, so that there is a comprehensive risk analysis on the counterparty.
Brilliant.
Maybe I want to say something as well. I think that it's clear what we're all saying. It takes three to tango. It takes us, the startups, let's say the technology providers, or those that are the geeks that are trying to use whatever it's out there to our best knowledge, the banks or the FIs, but also the regulators. And I see today still that there's somehow a misunderstanding. Because so Robert said, yeah, they should listen to us. Well, I was at the conference not so long ago, and the regulator was actually explaining what RegTech was. And they said RegTech, very proudly, RegTech equals DLT, distributed technology, ledger technology. And like, oh my God, has nothing to do with each other. So it is also a matter of speaking with each other. If we can really learn from each other, and then I come back to what I said previously, it's the common objective. And I think that should drive us all. Because if we don't have a common objective, well, those that are criminals, they actually do. They have their business model and they know clearly what to do is get money from poor people that will be frauded by them. So I think that's what we need to do, collaborate, three to tango.
Yep, totally agree there. Totally agree there. Oh, well, we have some more questions here. The next one is, from a geographical perspective, how does the RegTech landscape change in Asia, Europe, UK, or the US?
Yeah,
Yes,
I mean, so we have offices in New York and Singapore and London, I guess, and so I guess I can talk about that briefly in terms of how they differ. I guess each different ecosystem in terms of the Americas, even within the US and South America, has vastly different regulatory approaches and underlying financial infrastructures and policies and regulations. I guess you see in the US, state by state licensing, you have the NY, Department of Financial Services. In New York, you have the OCC, you have FinCEN, you have this kind of myriad and patchwork of regulations, and then you have the underlying payment infrastructure, which is kind of very archaic. You have 10,000 community banks. Plaid is basically open banking, whereas in Europe you have open banking as a kind of government initiative, and therefore you have this huge profusion of new entrants there. I guess post-Brexit, you have the FCA and the EU with separate policies. Singapore, the biggest regulator there is probably the MAS, and that's the kind of leader, I think, largely in Asia. We operate also in Australia. There's like AusTrack, who are kind of have their own policies. I think so. In each country, you have different underlying financial infrastructures and credit infrastructures and policies and procedures. But the commonalities are a real desire to use machine learning, AI, and innovate, because people recognize throughout the world that fintech is consuming and eating all of the underlying banks and bypassing the existing infrastructures in a kind of island hopping strategy. You saw today a neobank in the UK is now worth $33 billion, which is bigger than one of the big four in the UK. So RegTech has really grown up on the new system of fintech, and regulators welcome this because the old way of doing things they know is terrible, and there has to be a better way. And I think rather than trying to work with the big banks, you can simply wait for them to become obsolete, because lots of our clients didn't exist 5 years ago, but suddenly they're kind of huge and much bigger than the incumbents themselves.
Yeah, you're right. Correct. Okay, I think we have time for one last question, which is, in response to the pandemic, how should companies change their future RegTech strategy? And a very pertinent question. The larger point here being that with many institutions today and a lot of information flowing in, off-site supervision will become an even more difficult task. And with the advent of the pandemic, regulators would be less able to use on-site supervision. And so they will have to rely almost entirely on an off-site supervision model. And given the situation, off-site supervision will become a very difficult job. So it's like what to do.
Yeah, I mean, Nidhish, I think I'll chip in here. So we see this today. I mean, we are one of the problems that we're solving for a client is across their supply chain risk, right? I mean, how do you know the credibility of the people that you've added in the supply chain? You have 10,000 counterparties with whom you're doing business with. Now, in the pandemic times, you're not really going to go meet them, or the traditional way in which the verification and analysis was done is not going to apply. So there is an increasing, realization that one is there is going to be a cost for non-compliance, meaning it is easier for for compromised individuals to become part of your system, because the traditional ways of verification and compliance is going to be challenging to in such a remote system. So I think it is again coming back to a technology adoption where we have businesses, not just regulators looking to enforce, but businesses are looking to enforce compliance. More from the point of view of there is a recognition of non-compliance at the business end itself, not just from a regulator point of view. That hey, I mean, we need to sanitize our counterparty network, and we need to know who we are doing business with. So I think from a RegTech point of view, there is an increased realization of the cost for non-compliance, right? I mean, from a business point of view, and not just from a regulator point of view, that the pandemic has induced, and technology has a big role to play to solve this problem.
Maybe I would like to add a little bit as well. I agree with you, Govind, that's really like that. I also like what Charlie was saying earlier on with neobanks, and I think that what you see in the industry is it's the rise of banking as a platform, and that's something very interesting, because that means that there are bits and pieces which are interoperable with each other and could be linked to each other. So that also leaves room for those new tech players on which we are around the table to play an important role in this future model where we all connected through APIs with data layers in between. So I totally agree that yeah, going forward, that's something that we also noticed in our company in the wealth industry, is that the COVID has really gave a large boost to digital transformation within the smaller financial institutions too. So it's not only about the big ones, it's also about the smaller ones. But the fact that you make it as a platform allows also the smaller players to get access to tooling that usually was only available for the big banks. And I think that's a nice thing. It means that it becomes more accessible for every financial player in the industry, and it is needed, because otherwise you will create loopholes, and that's exactly what you don't want.
Great. So I think we are done with the questions. None more to go. Gentlemen, it was a privilege listening to all of you and your views, and I'm so sure we can continue this discussion subsequently also. I'm so sure through IAMI, a lot of our audience would love to engage with you, and so I'll request them to send mails to IAMI, and from there they can do. Thanks a lot. It was actually lovely to have you on the panel, and you took time out from whatever time zones you're in, and I'll hand over back to the host.
Thank you, sir. Thank you so much.
Thanks,
So
Nidhish.
yeah. So special thanks to all our panelists and the moderator as well. Thank you for being here, making it possible. So on that note, we are concluding this edition of Pursuit 2021, Combating Financial Frauds with Technology, supported by Invest India and Startup India. We believe it has added value to the professional lives of every person attending it. I would like to thank once again all of you for participating and making this happen. Special thanks to our session partner, Refinitiv, gold partner, Reactor, Gold Partner Netherlands Embassy, Gold Partner Cybersprint, Bronze Partner Onfido, and Knowledge Partner EY. The video of this event will be available on demand and all the registered delegates would be notified about it. We shall keep you updated for our upcoming events, and you can visit our website, which reads www.iamai.in, to get more information about all our upcoming events and be partners with us too. Thank you, everyone, and have a great evening.